Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, I'm going to be taking a look at the stock market and other indicators as well as the Magnificent Seven stocks. Let's get into fear and greed. And on pie vesting, we are in fear, and on CNN, fear and greed index, we are on fear. So maybe there's some opportunities out there in the markets, something to keep in the back of your mind. I'm going to keep bringing this up, see what happens. Is that after the presidential election, this is just the average from the S&P from the 30s all the way till the last election, that on average we do see a little bit of sideways for a few months, so that is normal. Another thing to keep in mind is, as far as the strongest returns based on the year of the presidential cycle, the first and second year aren't always the best. And there's been a lot of talk out there. I'll show you some of the indicators why that is, as far as there being a possible recession to finally hit the US economy. So I'll show you some charts that show why that may be coming and why it may line up with the second year being 2026. As far as rate cuts, when the Fed starts cutting rates after they hold or pause, you can see there's two paths. That there's a non-recessionary dark green path. That's the one we've been on. Obviously, we're in newer all-time highs. And then there's the recessionary path. However, something to keep in mind is that the Fed has been cutting by an average of 25 basis points. Yes, they started out with 50, but they didn't cut in October, so it's been an average of 25. And so if they are to pause sometime next year and maybe even raise rates because of inflation, then after they cut from the raise rates would then be what to watch for. If there's 50 basis point cuts, when they're cutting large and fast, that's when something's broken. As far as the Shiller PE ratio, this is one of those macro indicators to just invest cautiously. And if you are putting any money away in the stock market, that right now it is at a very elevated time. So you have to be thinking 10 years out. And some of my essential questions when I'm putting money in the stocks is, number one, is this company, do I believe in my bones this company will be around in 20 years? If I can confidently say yes, then I ask, is this a company whose product I use? Is it a product I like? Have I checked their balance sheet? You can go on to Market Watch and take a look at their assets to liabilities ratio. Is that positive? Those are things I ask myself first before going over to the charts and seeing if we're at a good discounted value. Let's quick hop over to crypto. No, a lot of you are here for that, but the stock market does affect crypto. Bitcoin's still up in greed, which is surprising me. As far as the alt year index, it has come back down. We are having a higher low, so possibly decent time to get in on alts. And if you want to hear more about crypto's crypto cycle, my thoughts on that, subscribe. I do videos every week on the rainbow chart, Bitcoin mining stocks. I try to do videos of other altcoins that you can get on Coinbase or Robinhood, some of the easier places to get them. So subscribe, and you can always request certain altcoins for me to do analysis on, as well as we on this channel I talk about Bitcoin mining stocks too, and those are available on Robinhood as well. So let's get into it. The S&P 500 right now, we're on the weekly. Noted last week we did get a sell signal, but it is finding somewhat of support at this. See that blue line? That's the 10-week moving average. If we go in on the daily, I'm curious to see where we're at. You can see nice bounce, nice supports off the 50-day moving average. So even though it has a sell signal right here, you can see whenever there's a strong wick just straight underneath, means there is some buy support. However, if it does get under here, the next area to watch for would be around the 100-day moving average at around 5,800. The VIX, this is the volatility of the S&P 500. And right now, still low. You can see, though, with the moving averages, it does have a big doji and it is finding resistance there. So if we are to see a turnaround, maybe the VIX starts to move down. We'll see. One of the indicators I think is a little bit of a leading indicator, which is nice, and that's percent of stocks above the 200-day moving average. Typically, when it gets to around the 70 level or higher is when you can see it start to move down. But look at how low it got. It got around 50, 51%. And recently, September 24. This one did get a little lower, but that was August. Down here, June, this April. Really, ever since last year, you can see after December of last year, you can see the data at the bottom. This has marked local bottoms in the market. So we'll see if this can go up and get back through all the moving averages. But if it does get rejected, you'd be taking a look at that being 45% or even this trend line down here. Now, one of the indicators that has forecasted recessions, this is the US 10-year minus 2-year. I was drawing a little fib here before, just playing around with it. But something to note is as far as this yield curve uninversion, it is uninverting higher than it has this whole cycle. So something to keep in mind. And I'll show you what's going on here, try to explain it in as simple terms as I can. So when the Fed raises rates, that typically inverts the yield curve when we're taking the 10-year minus the 2-year. This is the long end of the curve, which prices in or shows future perspectives on the economy if inflation is going to grow. The Fed really deals with the short end of the curve. But when they raise rates, we get inverted. I'm trying to simplify it as much as I can here. And when they lower rates is typically when it uninverts. Let's hide a little bit of that. There we go. So right now it is uninverting. And when it crosses that zero line, that's the uninversion. Okay. This has been inverted for as long as it's ever been in a long time, I believe, maybe ever. And these vertical red lines, I put those there because that was the bottom in the S&P 500. So it typically happens after an uninversion. There's a bottom and there's a recession somewhere in there. So this was the dot-com and great financial crisis. And you can see after the uninversion, we'll measure that out here. From there to the bottom was about 553 days. And from this uninversion to the bottom was about 658 days. We'll say 660 to the eventual bottom. But something to note here is look at the speed of which this starts to uninvert. So if that happens, then you may want to watch out for possible recessions or pullbacks in the market coming sooner than later. Now, there's a couple ways I look at this. One, we've been uninverted for a while. So in my mind, it might make sense for the bottom to be just as far away. So if we've been uninverted for this long, even if we have to wait like around 660 days or more, you can see at the bottom, where does that show? That shows dates at around later of 2026. It might even be further out in 2026. Another thing that's kind of curious here, I don't know, just something I've been playing with is, are we going to uninvert and then hit this trend line that we have going down over here and then possibly spike up later on and maybe get a recession line? I don't know. Just some things, hindsight always being 2020. But basically, the one thing that's important to know is that when the yield curve uninverts, that is typically a forecast for a recession in tough markets. And if inflation is to be a problem, let's find, oh, we're on stocks here, that's why. If inflation is to be a problem, then something to note is that in the past, right now, where's inflation at? Okay, if it is coming up, if it is going to resemble something like what happened in the 70s or 80s, is something important to know is that, people talk about, including myself, how when the Fed cuts rates and the yield curve uninverts, then there's a bottom after. But something important to note is that if we go back to the 70s, I put these white lines in here where inflation peaked. Where were the local bottoms in markets? Not that far away from where inflation was peaking. So if you're worried about inflation, do know that organically makes our dollars obviously worth less, but it organically makes stocks, is what I want to say, worth a lot more. It's not that the stocks are worth more per se, but our dollars are worth less. So long term, you can see what happens after inflation was controlled. The stock market rips up. So part of my personal plan is to be taking a look if we are going to see another inflation spike. That might be near where the next market bottom is, or when it's getting lower, you want to be able to possibly get in at some of that value. We'll take a look at some of the moving averages here. Let's go out to the monthly. Maybe the monthly will show us better. And so as far as the monthly, this is the 200 month moving average. You can see even in the 70s with inflation, it got down there a few times, even once far underneath. People would be freaking out if something like that happened. So just something to keep in mind. Anyways, let's get into the Magnificent Seven stocks and see how those are doing today. So this one I drew from the low to the high. Okay, let's go to the daily. And you can see here NVIDIA had a pullback to the 100-day moving average as well as the 236 fib. Got up back to the, it reclaimed its 50-day moving average, but does have this sell signal. Again, this is a stronger wick or a stronger candle. When we have a big wick on bottom, it does mean there's some buy support, but it does have a sell signal. So if it is to keep playing out, then maybe we revisit the 236 at around 130. And if this lower high, lower low trend continues, then you could even possibly see it playing out to the 200-day, the 382 at around 117. That'd be pretty decent discount territory for NVIDIA. As far as Microsoft, we drew this fib differently because we had this big macro high to low. And so Microsoft has run into the 1618 fib. And that's where it's finding support right now. You can see it's forming a wedge, lower highs, higher lows. And right now, look at that big sell candle. Geez. But it got support off the 100-day and the 50-day. I've said that Microsoft, even if we get a recession, all that, the start of discount territory for these is when you get to the 50-week or the 200-day and lower. Excuse me. Now they can break down further, so I take a dollar cost average approach. But if Microsoft does come back down to 418-ish, that would be a good discount value area to look at. As far as Apple, you can see we haven't drawn out our fib in a while. There we go. Apple is on its way to the 2618. Again, high to low, 2618 at around 278, and it is getting close to a 4 trillion market cap. So that might be, if we're talking about local tops in the market for a bit, Apple hitting 4 trillion, the first $4 trillion company, that might be a local top area as far as the markets go. That would be around 278. So just look for possible profit taking there. And as far as Apple, even when it was worth $1 trillion, it wasn't that long ago. Funny enough, it was, I think, just sometime back in 2018. So if it'd be worth about 4 times less. So that'd be what, around 70 to 80? Yeah, 70, 7 times 4, 28, maybe 60 to 70. Okay. Where was Apple 60 to 70? That's when it would be around 1 trillion. Yeah. So back here, late 2018 or 2019, about Apple was worth $1 trillion, just crossing the $1 trillion market cap area. I'm sure that seemed crazy at the time. And now we're at 4 trillion. That's what inflation does to the markets as well. So it does drive up prices of these stocks. And I showed you we have the PE ratios elevated as well. So don't be surprised, sometime 25, 26, you start to see those pullbacks happen. Amazon. Let's get into Amazon. This one's another high to low fib, and it's on its way. We want to see if it can get to this 1618 at around 255. Otherwise, we have the moving averages, even the 200-day moving average is at its former all-time high. So things are looking good for Amazon. Google here still struggling with that 1618 at around 193. And so it does have a sell signal. It is possible. We saw this happen in Tesla not long ago. It was a channel, not a wedge, but point still stands. It could come down and then even bounce off one of these moving averages or the wedge and get really a big rebound or a big bounce there. But right now, not really claiming the 1618 too well. So it's possible it just does one of these and takes off. Meta and then Tesla. So Meta, this one, we've talked about how strong it bounces off its moving averages, doesn't get that deep. and it's moving above its 1618, at least for now. If we zoom out, take a look at the weekly. Yeah, weekly's looking pretty good too. It might come down to its former all-time high, but the 2618 all the way up at 863. So if markets get very bullish euphoric, that'd be an area to look for. And then lastly, we'll take a look at Tesla. And as far as Tesla's concerned, my God, you can see Tesla's just detached from reality here. But what do we notice? We notice that it got out of this channel, okay, broke above its former all-time high, came down, it's testing its former all-time high support, might do that again. That's where the 20-day moving average is, and then we will see. Will it continue higher, or will it break down? You would want to watch what's going to happen at, I'm sure, the moving average, the 50-day. We'll run into this in the channel. It could be a strong area for support to go higher. So take it from me. Do I think Tesla as a company is worth this much? Hell no. However, when you look at stocks like Tesla, Palantir, SoFi, Nvidia, they're some of the most highly traded stocks on the market. And when you can get them at good value, if the market's bullish or about to be bullish, then some of these can take off. But they're more of a gamble, if you will, or an educated gamble. But yeah, Tesla, can't deny it, been doing pretty great recently. Almost looks like a freaking crypto doing a 3x ever since April, which is crazy. So anyways, hope you all enjoyed the video. I'll try to do a live stream if I can later today. And yeah, have a wonderful weekend. Thanks for watching. Take care.